Ladies and gentlemen, please welcome to the stage Julie Hyman, Yahoo Finance, and Holly Copeland, Senior Director, Corporate Social Responsibility, Sustainability and Impact, Horizon Therapeutics, joined by Michael Blake, Atlas Strategy Group, and Maria Colacurcio, CEO, Syndio.
Welcome, everyone. It's my pleasure to do my second panel of the day here, and it's a topic that is near and dear to my heart. I think for most women, this is a topic that we are passionate about, and that is pay equity. Obviously, a very important topic, and one that has been so frustrating and frustratingly slow for many people. And I should say not just women, but people of color as well in terms of achieving pay equity. So Holly is next to me on the stage. So I want to start with you, Holly, because you guys at Horizon, we were talking a little backstage about what you have managed to achieve in pay equity. And I want you to talk to me about sort of as a case study, what you guys have done, why it has worked, and how maybe other companies can do the same.
Absolutely, thank you, and thanks for having me here to engage in this very important conversation. At Horizon, we really took an approach where we wanted to make sure that the infrastructure that existed within the organization really supported this idea of pay equity, because there can be a verbal commitment that's made, but you have to back it up and making sure that the processes in place actually arm your managers, your middle managers, your hiring managers with what they need to execute on the concept of pay equity. And so the process at Horizon really started with understanding what our baseline was. So you engage with a third party to help you assess whether or not you have pay equity and come up with an action plan on how to address any potential deficiencies. And then make sure moving forward, once you understand that baseline, that you have those processes in place to assist in making sure that you can maintain it moving forward.
And Maria, I want to bring you into the conversation as well. When you talk to companies, and you all have a software platform that helps to try to advance pay equity and hiring equity. What do you hear from clients that is sort of the biggest roadblock for them to getting this done?
Yeah, great question. And again, thanks for having me. Just a pleasure to be here. I think the question is, what does it take to accomplish broader workplace equity in modern successful companies? And what we hear from clients all the time who've done this sort of the old-fashioned way where you outsource to a law firm and you do it in a one-and-done model where you're not looking at it again for a year, but it's a heavy consultative model, is that the single most significant factor in any pay equity analysis is starting pay. And so once you've done that, how do you stay on top of it over time as people are hired, as the company does merit cycles, as you're looking at proposed bonus pay? There's all these micro decisions that are laden with discretion in between these heavy analyses where companies have to make choices. And oftentimes if those choices are uninformed, that's where they can get themselves into trouble over and over again.
And Maria and Holly, I think we can also talk about this a little bit separately between women and people of color, because when I think of women and pay equity, I think of the issue of parenthood as one of the contributing factors to the persistent pay gap. And so I would ask both of you, let's start with Holly, about how the company addresses something like that when it comes to women being supported as they're going through that process.
So I might answer that with two different examples. I think one is really addressing what was just brought up on starting pay. Mm-hmm. So if you have a starting salary as you start out your career that's lower and there's a gap, as you move into other jobs and they ask what your salary was at the most recent role, you kind of compound that inequity over time. And so one of the things that we've done at Horizon is to really assess the value of a job at the outset, independent of an individual's previous pay. And what that does is it sort of levels that inequity internally, so you're starting at a good place, but also addressing externalities that would affect the pervasiveness of pay inequality when that individual might move on to their next role. Now they're starting at a higher state. And then the other example I might share with your question is in the benefits. So at Horizon, we offer parental leave that's equal for regardless of how you identify from a gender perspective. We also have a daycare service where parents are able to bring their children to work. It's subsidized. So thinking about how you can support the parents in a way where it creates equal access to support and care kind of creates this space for employees to really engage with the benefits program without it being gendered, which can impact a woman's ability to succeed.
And Maria?
Yeah, I think it's all about, much like what Holly was saying, it's all about analyzing, measuring, and implementing. So one of the things we see clients do all the time is in using our software, we identify the underlying policies and behaviors that are driving the disparities so that not only are you remediating and paying people what they deserve, regardless of gender, race, ethnicity, or something at the intersectionality of those things, but you're also identifying where your policies are broken. And from the perspective of the motherhood penalty, tenure is one that tends to be broken. And here's why. If you think about establishing a starting pay policy or even a non-negotiation policy for entry-level employees, that seems to work really well to eradicate pay disparities at the outset. But if you think about, let's say, an R&D function, even if women start out making more than men, what we tend to see is around year 5, they start to fall behind. And a lot of that is because, number one, men are just proportionately negotiating retention bonuses more aggressively than women are. And number two, women are taking parental leave. So they may be gone for 3 months and potentially miss that anniversary or that promotion or negotiation opportunity. And I always come at this from the vantage point of, this isn't about teaching women to be better negotiators. This is about companies and leaders taking responsibility and accountability to utilize their data and analyze it and measure how they're valuing their employees and their contributions and staying on top of gaps that start to form as they have women move into those types of scenarios.
Maria, I'm really glad you made that point. The onus should not be on the employees who are trying to get the right pay. They deserve the right pay, right? It shouldn't be on them to be doing that. It looks like Michael Blake is with us now, I believe, founder and CEO of the Atlas Strategy Group. And Michael, we heard a little bit from you earlier. And so sort of drawing on those comments, I would ask you, how much does ownership contribute to fair pay? In other words, you were talking about the importance of having Black ownership of voices, media voices in the case that you were citing. How important is it also when it comes to pay equity?
First, thank you for the opportunity, and it's absolutely paramount to be a part of the process. And forgive my delay, we actually just announced a transformative partnership here in the Bronx with the EPA administrator and a Latina firm in Aclama and a Black firm in Block Power, specifically, I think, applicable to this conversation around pay equity. Directly to the question, ownership is essential. First, we have to recognize that for those that are in power, there's a responsibility to pay everyone what they're worth, full stop. The rationalization that continues to happen of, I have to justify why you are paying me what I deserve, is obviously patriarchal, and there's a lot of privilege that is intertwined within that. And so fundamentally, ownership can break that tide. And in large part, if we are consistently in a scenario where someone is the consumer as opposed to the creator, if they are the operator as opposed to the owner, it transforms things. Case in point, a piece of legislation that was one of my bills that became law was that for any company that contracted with the state of New York below 300 employees would get paid in 15 days instead of 30 days. Now, why would that matter? Because too often what we kept seeing is that there was that delay in the process, but then underneath that, the employees had a great disparity that was happening in that large manner. So let's empower our women entrepreneurs, let's empower our entrepreneurs of color, and say very clearly that ownership breaks that tie. Lastly, I say often that you can be a man and a feminist at the same time. And the responsibility of how do you break this tie? And in large part is by changing things at scale. The regulations that have been in place for so long have been what has created the barriers. What we're doing at Atlas is focusing regularly on how do you bring equity and justice to scale. So in large part, whether it be the language within a bill whether it be the regulations that have existed, whether it be the new policies that are being considered around infrastructure. All of these pieces are dedicated to the question around ownership. Why is that relevant? Fundamentally, during the COVID pandemic, one thing we saw was small businesses and entrepreneurs not able to get access to capital, in large part because of algorithm discrimination, essentially determining these employees, these companies, these communities do not deserve the same level of economic support. And so in large part, if we focus primarily in getting more entrepreneurs of color, women as a whole, opportunities to be owners, then you can also dictate and determine what's going on as it relates to pay equity at scale.
And Michael, I just want to follow up on that since you're coming in a little bit later to the conversation when I give you another question. But I also think that you're sort of uniquely situated to answer this question because of your experience in the public and private sector, which is, what are the roles of private enterprise versus the public sphere and government in getting pay equity done?
Well, on the public side, something that former Secretary of Labor Tom Perez would always say is that you can change things at scale. And if you can have a law that would impact, whether it be here in New York, 19 million people, or if we're thinking about 300 million across the country, that is how you can transform things. So for example, if I look at the Economic Development Administration, now led by Alejandro Castillo, who used to run the Minority Business Development Agency, then I can have someone who's an advocate who understands what regulations do I put into place that create support at scale. The best anecdote I would give to this question was when we were changing rules to be fairer for communities of color and for women, that we saw an RFP line years ago that said that recipients could only be previous recipients. Now think about this. People are spending all their time applying for these RFPs, but in that one line within this large document literally blocked out any new opportunities. Separately, when it comes to the private sector, to your question, two different dynamics. One, we have to transform what's happening around access to capital. It cannot just be purely through traditional banks. We know that model does not work at scale. Can there be opportunities that are established? Yes. However, if you think about a Spring Bank that is obviously a conscious capital bank here in the Bronx and throughout the city, and others, and Amalgamated that has demonstrated that, you create more spaces in that manner. But lastly, in the private space, how do you actually say we're going to treat this dynamic and this synergy the way an investor would? An investor is not approaching what's going on around pay equity just in what's happening today. You're looking at the long game. Think about today, the decline that we saw in the S&P. Things can change immediately. However, if you have an approach of the long game, rather than just focusing on how do I win an election, that mindset from the private sector can better impact what's going on in the public sector. Intertwined in this, from the infrastructure bill, one thing that many of us are working on is how do you have a smart city approach? Shout out to Artie Tandon and their team in that focus approach. And of course, our collaboration with Concordia. Why is this relevant? Because then you can say, let's change things at scale through policy and regulation, while simultaneously the private sector can demonstrate the best practices that can help you when it comes to access to capital and actual implementation.
And I think that brings us back to Holly and the example of Horizon. And something I've been trying to tease out in my different conversations today is how much of the change is intended and how much is actually happening. So when you see a case like Horizon, what have you also been hearing from your peers, Holly, in terms of, or for that matter, folks that you're hiring who are also interviewing at other companies? What are they hearing? Are they getting the sense that they're going to be given that pay equity now, maybe growing throughout the industry, for example?
Mm-hmm. So what we've heard is kind of shock that this is still an issue. So we talk about this very vocally, and it is helpful from a recruitment and retention perspective, right? Because if you are trying to recruit a diverse workforce, knowing that you're going into a workplace that's going to pay you equally for your work is an incredibly important variable. And so individuals can be shocked that this isn't an assumption that they could receive this elsewhere. So the HR team has leaned into this. I think, from our perspective, it really goes beyond, it's an ethical issue for business. I mean, if we all know that this exists and this is a problem, It's really imperative that companies are proactive in understanding the scale and breadth of the problem, and then making sure that the company addresses it in a proactive way, and that's through the act itself, right? Like, you have to do the pay equity study, and then you have to implement these systems in place that address the ability for it to creep back in. Two other examples, I had shared earlier about how Horizon is very mindful about determining the value of a position regardless of what someone's salary was prior to applying for the vacancy. But then once they're in the business, once they work for us, there are two processes that we engage in to ensure that they're guaranteed pay equity over the longer term. One is making sure that managers have access to what's called like a market adjustment budget. And the idea here is, as unconscious biases or perhaps conscious biases creep in during that merit or annual review process, there's an opportunity for managers to correct or rectify any potential issues that may have arisen previously. So there's that sort of check on the ongoing behavior of a manager. And then additionally, that process involves an independent internal actor. So when recommendations are made by managers, there's a human resources partner that actually sits in and evaluates whether or not the recommendations are valid and really rooted in data and experience versus perhaps a personal preference. So building in these systems, these checks and balances is what you can do as any entity, not just a business, but a nonprofit, any organization, to make sure that you're staying true to the commitment and that you have it for the long term.
Maria, I want to come back to you. Are companies interested in doing this? Are you here? I mean, I guess it's important to your business that they should be, but are you hearing from a critical mass of corporations that want to do the work and make the necessary changes to make this stuff happen?
So I think there is hope on this, and there's a couple of different elements. So Edelman just released their belief-driven employee, which was sort of an off-cycle on their trust barometer, and it showed that 6 out of 10 employees right now are making their choices about where to go work based on the beliefs and whether they believe the CEO is actually performative or following through on commitments for those beliefs. So there's a tremendous amount at stake here for employers. And I think you're also seeing the downside of this. I mean, think of 3 that have been in the news recently. You have Blizzard Entertainment at reputational risk because of transparency issues. Apple was just in the news because they were barring conversations about pay equity on Slack. You've got Amazon in a lawsuit about leveling. So, I mean, the risks here of not getting this right are tremendous. And on the flip side, the upside benefits in terms of attraction and retaining employees are also tremendous. I think what I'm seeing that I really like, much to Michael's points, is that this used to be a conversation about gender. Back when it started, it was about gender, equal pay. And now we're finally starting to talk about the fact that intersectionality is a huge double whammy for folks. And we have to be looking at this in terms of the whole scope of equal pay and how it impacts gender, race, ethnicity, and then all the things that could sit at the intersectionality of those things. And I do think companies and leaders are now having the right level of conversation to say, let's not just look at this through the lens of legal risk and reducing our chances of a lawsuit. Let's look at this as a people issue and how we value our people.
So to that point then, Michael, what's the single most important change you think that entities can make when they're looking at this issue of pay equity?
Well, I'll tie it to Maria's point right there. I think it is seeing that your employees are team members who are investments and not charity. If you think about it from a long game approach, that changes things, and people are very clear on that. You don't feel like I have to go into an office in the same way you did a year and a half ago in that manner. And from a substantive policy standpoint, it is the clear indication that there will be a reward, if you will, for the companies that do the right things if they're trying to engage and collaborate with the public sector. We cannot continue to have an approach where entities are able to continue to get contracts and funding and support, but they're actually not treating their employees correctly. And so if we're going to be serious about this, and I think that goes back to your previous question as well, around the private sector and that incentive-based model that often approaches occurred, having that similar type of mindset in what's happening here. Why is that relevant? When you see the hundreds of millions of dollars that are going out this year and next year because of ARPA and soon through the infrastructure bill, at the end of the day, companies need to demonstrate, if you will not value your employees, we will not give you our contracts and we will not value you.
Yeah, really great point that there are a lot of levers that can be pulled in both the public and private sector on this issue. We're out of time. That went very quickly. Once again, thank you so much, all three of you, Michael, Maria, and Holly, and really appreciate all of you listening.